All right, we're all set. So Van here at Milestone, and it's a Friday afternoon. We're having a little happy hour in our respective homes, and I'm here with Chuck Donalies of Donalies Financial Planning in DC. And Chuck has been a supporter of Milestone from our start, and excited to chat with him today. And we're sharing a beer in recognition of Friday happy hour. So cheers to you, Chuck. Good to see you.
Cheers. I'm going with bourbon today, but you know,
Very
so good.
nice. Very nice. I'm going with beer in my Yankees cozy, and I really, really miss the Yankees and can't wait to start seeing sports live again. Chuck, I don't know if you feel the same way, but I'm dying over here.
Um, I miss my kids are really into soccer, and so I know that they are really missing that, and I miss coaching their soccer games. So yes, I maybe not on the same, maybe not into like sports on the national level like you, but definitely local.
Hey, same here, man. My kids, they're doing their sports in the house, which makes it, doubly difficult. I've got the cheer person doing her, backflips and stuff. I've got a dance person dancing all over the place, and then the soccer balls are just flying all over the house too. We got to
Hopefully
get
not causing
outside.
too much damage.
Yeah, not yet. So Chuck, I've known you for a while, but let's introduce you to the rest of the world here. Tell us a little bit about what you do. I mean, you've got Donalies Financial, and you're a certified financial planner, a CFP. Tell us what that's all about.
So, as a certified financial planner, I help clients with a broad or a wide variety of financial planning topics, including, but not limited to, investments, taxes, retirement planning, budgeting, cash flow analysis and management, employee benefits, insurance, including life insurance, but also homeowners and auto insurance, estate planning, you name it. There's, let's face it, money touches very many parts of our lives. And so my job as a certified financial planner is to work in my client's best interests and help them manage that part of their life that they may not have the time, energy, inclination to do that on their own. That's what I'm there for.
Well, that's a pretty poignant issue in these days, right? Where a lot of folks are, facing the threat of perhaps being furloughed or losing their jobs, or just simply losing money in the markets, or having other financial difficulties somewhat related to the COVID pandemic. So what's happening right now amongst your clients in general? What are you seeing? And how are strategies changing?
So it's a scary time for everybody. Every time you have a downturn like this, or recession, I don't know if we're calling it a depression quite yet, but whenever you have something like this come up, it always feels like it's different, it's new, and each time it is a little different. So it's scary, and no one likes change. No one likes to be disrupted from their regular routine, and that this one is especially hurtful because people have to stay home. Fortunately, or if you are fortunate to be able to stay home, I think that that's wonderful and should definitely do that. But what I'm seeing right now are people who are losing jobs. Maybe if they haven't lost a job, they may be having their income cut by some percentage. It's not unusual to have maybe one spouse, among my clients at least, who has a very stable job, and then the other may be self-employed. So in cases like that, they're actually pretty fortunate if they have one spouse that's got some stability there. But it's still, there's still some hardships, and there's a lot of uncertainty. No one knows how long this is going to go on. And I feel bad for those that are that either have lost jobs and just can't go out and work right now, or if you're out there and you're working on some of the front line, you're in the medical profession, or you're working in a grocery store or some other in high demand spot right now, I feel really, I feel bad for those people. It's a really tough thing. It's a tough situation all around.
Are you seeing any of these stimulus packages, pull through to provide liquidity and other support to some of your clients? How's that working out?
So there's a couple different things there. First, you've got the stimulus package that was sent out, stimulus checks that were being sent to almost everybody in the United States based on some sort of income level. And I've seen some clients have already received that if they had a bank account set up, when they had paid taxes previously. So I know some clients have received that money. That's one thing. Then you have the Paycheck Protection Program, and I have not encountered any clients who have yet to receive funds through that. I know that I have several clients who have applied for it, but none of them actually have received any funding from that yet, which is pretty frustrating. I can only offer up anecdotal advice, or takes on the subject, but it looks like a lot of the initial funding round went to some large businesses, and the smaller ones that, like my clients, could have received did not come through yet. So they're waiting, and I check in on those clients occasionally and just see, hey, have you received anything yet? But I help facilitate some of that application process, but nothing yet, unfortunately. And that seems to be, for a lot of very small businesses, that seems to be the case so far.
Right. Now, you're part of a broader network, a national network of financial planners. Tell me about differences between the DC area and other parts of the country. I mean, I would guess that in DC, we're a little more insulated from some of these issues because of the high sort of percentage of people who are employed by the government, or kind of more of those necessary, essential types of jobs. Have you observed any of those regional differences?
So I have a couple different study groups that I belong to, made up of planners from around the country, and we check in either weekly or every other week. And what I'm hearing from other planners is that in those that are in the bigger cities, and I'm talking like New York area, New Jersey, DC, and then again on the West Coast, California, Seattle region. Those in the bigger cities are seeing a lot of clients who are working from home and still have the ability to do that. They tend to not have the stability, like you said, of maybe one spouse or even both spouses with a very stable job. So you may have, much more upheaval, financial upheaval in their lives going on right now than what I'm seeing, at least as the majority of my clients are local. So yeah, it definitely depends on where someone is located, different parts of the country, whether they're in, a city or a bit more rural, as to how they're being affected by this right now. And I think that's pretty clear based on what we're seeing in the news and how city versus rural is being affected by the virus right now. Yeah.
Now, one part of what you do, obviously, is to prepare people for situations like this. I mean, maybe not as extreme and as sort of immediate of a problem this one became, but to prepare for downturns and liquidity crunches and job loss and things like that by, having prudent saving strategies, expense management, budgeting, et cetera. I imagine you've had some "I told you so" moments recently with some of your clients. That's what I'm guessing. But tell us a little bit about that, and how have you been able to help some folks sort of be prepared, right? Better prepared for this, and what would you sort of advise for people, as they're early in their career right now, and maybe in the future, we're going to sort of run into downturns like this again. How do you prepare for it?
Okay, so, well, I mean, so for one thing, I think I don't like the "I told you so," gotchas too much, because no one likes that. No one likes to be told "I told you so." But I will say I had one client who just retired last year, and I was a bit more conservative with the overall portfolio last year, which, as I think, as most people will know, that the stock market did very well in 2019. So there was some grumbling about maybe being too conservative last year. And then going into this year, the client was very happy and did thank me for being maybe a little overly conservative with things. So, I call that's a win. That's a win. But I did not say "I told you so."
There you go.
That would not be appropriate. But to your other point about helping clients be prepared, I take a pretty basic approach to this. It's, you've got to have some emergency savings saved up, and the goal is something like 3 to 6 months of living expenses. And I understand that can be a tall order for many people, especially depending on if you're juggling kids and student loans and other debts. But for me and my clients, my goal is always to get them to have 3 to 6 months of living expenses, to have their credit cards paid down or paid off if possible, to try and get rid of other debts like student loans as quickly as possible, so that they're ready in case things like this, and hopefully they're saving for retirement as well. But we look at all of those things so that when things like this happen, and they do happen with some regularity, that they can weather that storm and not be too upset by it. And I have to say that, I've checked in with all of my clients, over the past few weeks, and almost all of them have taken it very well. Of course, no one likes to see their 401k accounts or other investments decreasing in value, but very few people were really concerned about things, and if there was a job loss or income loss or decreased, then I helped them and walked them through things that they could do in order to improve that situation and make it through. But you asked earlier about what am I doing? What am I telling them differently at this time? Or am I telling them to change their plans or their investment strategies? And the answer is really no. That's the idea of working with a financial planner, is to put a financial plan in place so that when things like this happen, you have a plan to fall back on, and you can say, we have this in place, we have some emergency savings, so we're ready to go, and we don't have to make a major course correction. In situations where people have maybe money that they need to invest, we're not really changing anything. All we're doing is maybe talking, collaborating on what the appropriate time frame is to get that money into the market. We've had a drop in financial markets. The S&P 500 is down 12% year to date. That's a good time to invest some cash if you have it, to take advantage of that decline. So I'm really not telling clients to do things differently or make dramatic changes. Really, it's just urging caution and just stay optimistic, stick to the plan. You'll get through it. That's really it.
I think that's great. And, I think it's pretty clear from this situation, also the financial crisis, and, this could happen on a somewhat regular basis, right? I mean, there's corrections that happen, but we've had some very steep corrections or recessions in the last couple of decades. People ought to have those liquid funds available. And that only happens if you save properly. But let's shift a little bit and talk more about the home buying journey. And, for folks that are planning for that, and, that's a big financial decision, right? That's a big investment, and it's an illiquid asset once you own it. And there's a lot of expenses related to owning a house that some people don't think about as well. Let's talk about those folks and planning for that in general, and how those folks during normal times and times where there's a recession can be in a good place. What do you advise for your clients that are starting to think about purchasing a home in the next 12 months? What do you focus on, and how do you help them sort of plan accordingly to be in a good spot to do that?
So first, it starts with just a series of questions, a discussion, just a conversation about what their time frame is, why they want to buy, where they're looking to buy. So I can kind of get a sense of what their finances need to be in order to make that decision. Obviously, in a region like the DC region, home prices are pretty high, and so you need to have finances in order to make sure you really are able to be competitive in this market. So it starts with just the basics. What's your budget for a monthly payment? What is that? Do you have enough cash set aside for that down payment and the closing costs that go with that? Not just that, but moving costs, moving expenses. And then, I think we all know that when you move into some place, there's going to be stuff that you need to buy. So between down payment, closing costs, moving expenses, and then, kind of first, home expenses as you move in, potential repairs, make sure they have that money set aside and ready to go for that big purchase. So I'm a spreadsheet guy. I like to build a spreadsheet and, walk them through what their expenses are based on their spending levels. So we do a cash flow analysis. We look at that. Then we add in what this potential home is going to be, what that's going to cost them on a monthly basis. And kind of it's just simple math right there. Okay, what's this look like? What's the effect of this? Whether it's a new place, their first time home buyer, or maybe they're moving up, can they afford a much larger payment potentially? If they have a home, are they going to sell that home to buy the next one, or are they going to try and keep it as a rental unit? And so I do some analysis for them around that as well. And does it make sense to keep the place? Because there's lots of ongoing costs associated with being a landlord and headaches that go with that. So I have some pretty sophisticated software to model those scenarios and help them decide if it makes sense to keep a place or to sell it. So I'm helping clients, whether they're first-time home buyers all the way on to those that are purchasing multiple properties. And it always gets complicated because you have to even think about things like, if they have kids, what's the location of this home? Is it going to be near schools that they are going to feel comfortable sending their kids to? Is it going to be, would they be better off buying in a more expensive area to get access to better schools? These are all things that we have to think about and factor into the planning process.
So obviously Milestone exists to help bridge that connection between financial planning and home buying, right? But pretend for a second that Milestone didn't exist, and it didn't exist as recently as a couple of years ago, right? If there was no sort of planning program to help people get to that point, what would you be seeing in terms of people getting to the home buying stage and meeting with a lender and their realtor? What mistakes have they made? What would you do to sort of help make sure that they come out on the other side with a house that they can afford, making good decisions along the way on their mortgage and their home purchase decisions? What would you do in those circumstances?
So prior to something like Milestone, it could be, I always thought it was kind of a crapshoot as to how clients ended up buying homes. If you were fortunate enough to have worked with a financial planner, whether it was me or someone else, I think you often had better results because you went in, the client would go in much more well prepared for that transaction. They had a budget in mind. They knew how much they could afford to spend, not just whatever the lender said, oh, we'll give you $1 million. But if they could only afford 700, it's a big difference there. So those that had worked with a financial planner were really more well prepared. And I really think that Milestone has been wonderful because it's allowed about clients and consumers to come up with, to work out some of these issues, the cash flow, all of the planning and aspects of being a homeowner, so that the outcome of being a homeowner is much better. That education is just incredible. And it's very much lacking in our society today. So I'm really happy to see that not just my clients will be better prepared, but other people out there who go through that homeowner, that home buyer, the Milestone process will be better prepared to be homeowners.
I've observed that people in general are moving faster in getting from the point of, hey, I'm thinking about buying a house, to actually getting in homes and seeing homes, because social media and Zillow and other online services help expedite that process by showcasing homes, sometimes in really, elaborate 3D, beautiful ways, right? It sort of sparks the interest, the energy, and the excitement about being a homeowner, right? And so that's nice and all, and it serves really a great purpose. But at the same time, the side effect for somebody who's not planning accordingly is that they wind up getting into a house, get emotionally engaged with the idea of buying a home, talk to the real estate agent and lender who are, incentivized to close deals pretty quickly. And then next thing you know, they've bought a house. And again, it's exciting, it's great and all, but it seems like that kind of a fast track process could lead to some bad decisions.
Yeah, especially when you start thinking about, moving up, getting from one property to another property, and just the pace of that transaction. It's not always about just pushing people through to, to make some money off of, that transaction. I think as professionals, it's our duty to ensure that they know what they're getting themselves into, and to help them kind of hold their hands a bit through that in order to have a better outcome, so that which I think is better for society as a whole, because it leads to home ownership that can last, and it's not just a quick thing that someone suddenly has to sell the house at a distressed sale just to get out of it for some reason. It's good that we're there to help them so they can afford it. They know what they're doing. I don't know why this hasn't been done from the beginning.
So that's absolutely right. Well, that's why we're doing it, right? So we're making real progress and making real effects in people's lives. And I think that's a great thing. And that certainly motivates me to continue it. A question about sort of folks that in this environment are still looking for a home, but questioning whether they should, right? There's all this uncertainty out there in the markets. People aren't even leaving their homes, but they were in the midst of, looking at homes and deciding whether to continue that process. What do you say about that, Chuck? I mean, should people be putting home buying on the shelf until things, become more clear, or should they be looking at this more as an opportunistic period? What are your thoughts?
So, despite my wife often referring to me as a pessimist, when it comes to matters of finance, I'm very much an optimist. And so I do think this is a good opportunity to, if you were already thinking of buying a home, just continue with that process. Sure, the process is going to be different right now because of social distancing and quarantines, that sort of thing. But it can still be done. And in fact, I still have some clients who are in the process of looking for a home. I think they actually may be settling or closing very soon on a home. So again, the process was a little different for them, but I do think it was a great opportunity as well because there were fewer people in the DC region, especially. There were fewer competitors vying for those properties. That was great. Interest rates are very low right now, so that's a great opportunity right there. So no, I don't think that people need to stop the home buying process just because of what's happening. But that said, it always depends on the situation, the finances of that particular person or couple. Your finances will dictate what you are able to do. And I do think that, as long as you have your finances in order, keep going. It's always a good time to look at buying property.
I mean, usually buying a house is a long-term investment, right? It's a long-term decision.
Sure.
So whether you buy now or 6 months from now or whatever, the question is, are you going to keep this house for the long term? If so, you want to sort of optimize your opportunity to find the right house, to buy the right house, and if possible, get a great deal on that, right? So you pointed out that rates are very low. That certainly makes it a better deal because your buying power is stronger, your monthly payment winds up being lower, the amount of interest you pay on the mortgage that you get is going to be lower, and from a practical standpoint, if you're going up maybe against a little less competition in buying that house, that makes it a little easier to purchase the place that you really love. So I've observed that for sure. I think there's also folks that have some uncertainty about their job stability and their income stability. I think, as you said, it's a case by case basis, but those situations I think do require a little bit more perspective. And then the last thing is really, if people do plan and save accordingly, right? They can get through kind of this temporary period of uncertainty and still be liquid enough to do with the things they need to do and buy the things they need to buy and get through it that way as well. But to your point, I see this as more of a long-term decision, and short-term moments shouldn't really impact the long-term decision.
Especially if they've done some of the work and ensure that their finances are ready to go. If that hard work was done early, then and they're still in good shape, job-wise, then I think there's no reason not to continue to take advantage of this opportunity that we have here.
Excellent. All right, Chuck, we're nearing on 30 minutes of this, and I really appreciate everything, all the insights you're giving us. I have one last question for you. So folks that just purchased a house, right? Obviously, they've done the things that they needed to do to be in a position to buy. Now that they own a house, how does working with a financial planner benefit them for the long run? How do you counsel folks who just recently purchased a home, and what sort of financial products should they be looking at and decisions they should be thinking about?
So, it's often the same process. And that I'm helping people with even after they've purchased a home, which is, the cash flow management and analysis. It's retirement, it's college planning, insurance planning, and tax planning. It's all of this. That is the same no matter what. But what I do find pretty frequently, and I work with a lot of clients, in their 30s and 40s, even 50s. What I do find is that people buy homes, and then not too long after that, they start thinking about things like college if they've got kids, or retirement planning. So where I'm adding value is just focusing on those things and helping them gear up or plan for the next phase of life that's going to hit them whether that's college, whether it's retirement, and thinking through, you know, their investment strategies, all of those things. So process isn't very different. It's just maybe the subjects, the topics that we're focusing on maybe shift up a little bit, just because their priorities have changed now that they've crossed off the home purchase from that list, that to-do list that most people seem to follow. So same topics, different order, different priorities, that sort of thing.
Awesome. Chuck, always a pleasure talking to you.
I've enjoyed it always, and it's always good to have a drink with my friend.
Your hair looks great, by the way. You don't need a haircut.
Thank you.
I won't bother to show you guys what mine looks like. Mine grows a little faster, as you can tell here also. Chuck, have a great weekend. Hopefully we can chat again soon through this medium.
I'd love that.
All right. Have a good one, bud.
Yeah, see you. Take care.